Good afternoon, everyone. It's a great pleasure to be here. I realize that we're standing in between your lunch, so we'll try and make this a fun panel so that you can go into the lunch break with lots of food for thought. My name is James Delaney. I'm from AIMA, which is the Alternative Investment Management Association. So we exist to support and represent the alternative investment community, specifically hedge funds. We were established in 1990. We have over 2,000 members in over 60 countries. Collectively, they manage more than $2 trillion in assets, both hedge fund and private credit assets. Earlier this year, we set up the Digital Assets Working Group, the AIMA DORG. That is now one of our largest groups at AIMA, with over 250 people represented. That group drives AIMA's regulatory engagement, research and education, operational guidance in the area of digital assets. Members include specialist crypto-native hedge funds, as well as more generalist hedge funds, and also the wider digital assets ecosystem that exists to support those hedge funds. If anyone's interested in finding out more about that group, please do get in contact with me. And I'll now let the other panelists introduce themselves, so perhaps starting with Dimo first.
Hi, good afternoon, everybody. Demetrius Skalkotos, Global Head of Sales for Block Daemon. Everybody calls me Demo, so feel free to call me Demo.
Perfect. Ivan?
Ivan Lastours. I'm working for PPI France as a blockchain crypto lead. PPI France is kind of the French sovereign fund.
Andrew?
Hi, everyone. I'm Andrew Price. I'm the Chief Compliance Officer of Zodium Markets, which is institutional-only digital asset brokerage and exchange, which is a venture of Standard Chartered Bank and OSL, the Asian digital exchange and brokerage. So it's good to be here and looking forward to an interesting panel.
Thanks, Andrew.
And I'm Shane Edwards, Head of Investment Products for Equinix Group. We're a NASDAQ-listed digital asset company. We have an exchange run out of Singapore, a custodian in the UK, and the investment products business that I run, which includes a fund of crypto hedge funds and soon-to-launch exchange-traded notes in many different investable jurisdictions, particularly around Europe, bringing crypto to the masses.
Brilliant. Thanks, Shane. Thanks all. So we wanted to really kick off this panel by looking at sort of state of the union when it comes to institutional participation, what types of institutions are currently in this space, or which ones are sitting on the sidelines still. So just quickly from a hedge fund perspective, earlier this year we carried out a survey together with PwC and Elwood Asset Management, surveying the hedge fund community in terms of what the adoption looks like for digital assets. We unearthed that around 20% of traditional hedge funds are currently investing in the crypto space. Only around 1% to 3% on average of their total AUM was invested, but around 86% of those already invested said that they're looking to invest more later this year. Around 25%, so a quarter of hedge funds who weren't currently investing were looking to invest. So there's a lot of interest. As I said, our Digital Assets Working Group is now one of the largest at AIMA. So I think from the hedge funds, we've seen clear appetite. They're definitely doing more homework. There are some regulatory issues that we'll come on to later in the discussion. But I think, Dimo, maybe starting with you, sort of what do you see from a sort of infrastructure perspective, a sort of staking infrastructure perspective when it comes to institutional participation?
Well, first and foremost, you're seeing a lot of investment dollars just in the whole crypto landscape space. In each different crypto kind of cohort, whether it's banks, custodians, payment processors, liquidity providers, asset managers, and tech integrators, you're seeing enhanced infrastructure support. It's morphed from a Bitcoin, Ethereum world to massive protocol adoption world, and folks need help in scaling those particular infrastructures because their clients are demanding that. And with the rise in the bullish market that we're currently in, you're seeing the traditional financial service firms contemplate how they should enter the game. Are they going to enter the game on a trading capacity or a custodial capacity? And most of them are all in their phase of evaluation, doing research, writing research reports, communicating on how bullish they are of certain aspects of the market, and they're all working on adopting some infrastructure to proof of concept things and then work towards a particular offering.
Interesting. Thanks for that, Dimo. And I guess, Ivan, I know that you carried out a lot of sort of data screening around crypto funds. I can't remember the exact number, but I'm sure you'll tell us. But what did you sort of identify? What sort of trends did you pick up when you carried out that sort of research?
So we screened 1,300 pure crypto funds, so asset managers, hedge funds, VCs. There is at least 100 billion assets under management, and it's growing every day. I have to add the Paradigm One fund. So it's 50 billions are asset managers, mostly grayscale, of course. 30 to 35 billions are VCs with already giants like X16Z, Paradigm, Pantera, and the rest is hedge funds, and it's growing very fast. This is fiat money into professional crypto funds. I'm not counting the funds with crypto exposure. And if we add up the treasuries, so MicroStrategy style, we are adding 150 billions at least. Let's take a little leverage on this. It's conservative to say that there is 300 billions of institutional exposure in the crypto world. On 3 trillions, it's not that much, okay. Of course, we are waiting for the big inflows from banks, classic asset managers. But still, we can say that there is an institutional play. And the last figure, really interesting, is from Chain Analysis that state that 60% of the biggest DeFi transactions come from institutional players. So this is happening. Very hard to say where it's heading, because if banks are coming to the parties, then something will change. But very interesting to see that there are many institutional and very professional funds in this space.
Thanks, Ivan. I guess, Andrew, when sort of setting up your exchange and brokerage platform, sort of what were the considerations you made? What were you hearing from the institution side? What were they looking for?
Yeah. So our clients are from quite a broad spectrum of financial institutions. They're from large banks, asset managers, corporates, family offices. And kind of speaking to all of them, I think they've all historically felt a bit underserved in the institutional space. There's been a lot of focus on retail and trying to find trusted trading partners which give them that risk management, regulatory compliance experience. We found in talking to them about Zodium Markets in particular, but I'm sure there's other examples where the fact that Zodium Markets is backed by Standard Chartered, a global bank, in partnership with OSL, the only Hong Kong SFC authorized exchange and brokerage. They're really looking for that, and they're really kind of wanting that in the market, and that's why I think we'll see this accelerating as more institutional exchanges and brokerages become available to the institutions. And then secondly, we've seen that they're looking for neutral trading partners, segregation of duties across custody, across trading, across market making, which you haven't seen in the past. A lot of vertically integrated as a custodian, as a trading and exchange venue. And so looking for that, that segregation is really important for security, for many, many other advantages which actually other people have spoken about today. So I think those two things really will help, and that's what we're seeing in terms of demand from our clients. Yeah.
Interesting. Thanks, Andrew. Shane, I get a couple of questions here. Sort of what do you think is driving the institutional growth in this market from where you sit? And I guess in terms of when you're designing new digital assets products, what strategies are appealing to investors who might still see this asset class as quite foreign or niche?
It's a great question. There's push and there's pull, and there's also a little bit of confusion amongst institutions about really how to get involved in the asset class. From a push perspective, they're being pushed by their clients. I think it's not lost on institutions that their end clients are out there buying crypto. They don't want to miss out on the returns. They find it exciting, and they enjoy learning about this fascinating new asset class. So I think investment banks and others are going to be forced to get involved and cater to their clients or miss out on their business. So there's definitely a fear of missing out. And obviously some institutions will be more progressive than others. And for those followers, I think they'll definitely have the FOMO that everybody talks about. And from a pull perspective, it's not only revenue that's attractive. I mean, investment banking revenue generally has not been growing at all since the financial crisis. There's not much in the way of new innovation. And if anything, there's been some stifling of creativity, perhaps due to regulation. So I think they're keen to find new revenue sources. But banks and others are also extremely keen to figure out ways to cut costs. Now, a lot of systems out there look fantastic from the front end. Everything seems to be automated and well integrated. But sure enough, when you start to look behind the front end, you see a spaghetti web of legacy systems that sort of interconnect with each other, intermixed with lots of different manual processes and documents and term sheets and things that were updated some time ago that no one can quite find when they need to be found. There's a lot of work to do. And of course, all of the blockchain technology offers a way to revolutionize the cost base inside the financial markets, speed up transactional settlement. It's amazing that most stock transactions to this day still settle on a T+2 basis, where, of course, why aren't these things happening lightning fast when new technology is available and can be adopted? It will one day. It's going to evolve much like some time ago in the pits, people used hand signals to talk to each other. They moved to computers. This is the absolute game changer. This is the revolution that we're witnessing now, and it's an incredibly exciting time to be involved in finance and digital assets.
Just to add something to that, and I completely agree with what he says, but one of the other push mentalities is really, it's hard to ignore a bull market, and it's hard to ignore what we're seeing in the business today of yield generation that's being offered by staking platforms and staking services with all these new proof of stake protocols that are out there. It's hard to ignore that yield generation and that compounding yield month over month. So they're pushing their banks, they're pushing their custodians, they're asking for more prime services, staking being one of them, which is really why Blockdaemon is one of the beneficiaries of setting up that infrastructure for all those institutions.
Thanks for that, Dima. Yeah, I think when we surveyed members, it was sort of the exposure to that new sort of value ecosystem as opposed to sort of inflation hedge purposes or diversification that really came through in our survey with members. I guess, Ivan or Andrew, would you add anything to that sort of what's driving institutional growth in digital assets, or I think it's all been covered?
Yes, sorry if my voice was too weak. I'm too old for crypto parties. Yes, it's clearly interesting. For example, in France, banks are not that crypto-friendly, but clients from the private banking entities are pushing hard, and they need to give answers. They need to do partnerships, because otherwise these clients would go elsewhere. So I totally agree with you. It's pushing everywhere. And even in terms of talents, now we know that young traders say to the managers, let me put some crypto in my book, otherwise I will quit the bank. And this happens quite every week. So this is, I agree with you, this is a revolution, but at every level. It's also coming bottom up, and this is pretty new because we expect most strategic moves to come from top-down approach, but this is also a bottom-up approach, and this is completely new.
Yeah, and I completely agree with everything said. I think it's also a matter of confidence in some across the industry, because we're speaking to a family office who a year or two ago wouldn't even consider looking at putting any money in digital assets, but now are confident and have the options which they can be confident they can work with these people. So as that grows, I can only see that increasing further. Although, as we might come on to, the regulatory piece might stifle that slightly.
Interesting point. Moving on to sort of the regulatory topic now. So I think when we surveyed members, it was sort of 82% said that regulatory uncertainty is the greatest barrier to sort of adoption in this space. Interestingly, around 65% said that if some of the main barriers were to be overcome, then they would either accelerate their investment or start investing in digital asset space. So really that barrier of regulatory uncertainty is key. And we know that digital asset regulation is evolving at sort of dizzying speed across different markets. We know in Brussels they're talking about MiCA. We know Chair Gensler has his own thoughts on which way to go. We're waiting here in the UK for Treasury to come out with further rules. So we're at a sort of inflection point for sure. But I think maybe starting with Ivan, sort of, if I am a fund manager, what are sort of some of the considerations that need to be made, sort of where you would set up, what regulation might look like in 6 months? What sort of conversations are you having around those issues?
Very good question. There is two levels. There's one kind of macro level of what is the regulation in this country? Has the financial authority a dedicated fintech crypto teams? Is there a specific law, and are things clear? And then there is a second, more operational layer, like can I find an insurance for a crypto fund? And this is very basic, but this is a super good question. Because if you have all the good laws, but you don't have a custodian and an insurer, then you cannot set up your crypto fund. And so we see these kind of two-level challenges. The good news is that you have many, many different options and setups. The difficulty, of course, is that everything is moving.
Yeah. The only constant is change, I guess, the old adage. But Shane, from your conversations sort of with regulators in different jurisdictions when launching new products, sort of what are you picking up in terms of their approach to digital assets?
Well, it's a good question. There's a mixture of different approaches around the world, which I'm sure is not lost on anybody. But when you try to gaze into the crystal ball and look forward, you can definitely see that some regulators are very proactive. They see not only the benefits of getting crypto more into a regulated sphere for investors to access with those kind of safeguards and that kind of trust that is involved in regulated products, but I think they're thinking about the bigger picture. The bigger picture, crypto is part of that, but actually it's the whole revolution that comes along with this kind of technology. And I think by actively embracing that, by making sure they're staffed correctly with people who understand the technology and the positive aspects, that they see economic growth off the back of this. This is the future. They embrace it. They get ahead of the curve. I think for some other regulators, which we won't necessarily go into a name, that they're not quite sure what their approach is, and they take the risk, I think, of being left behind, not only at a crypto level, where clients might, therefore end up sending their money overseas and kind of doing that business anyway, but there's broader implications, I think, for their economy if they don't correctly equip themselves with the type of skill set that comes along with this, this future innovation. So there's a real dichotomy, but no doubt some of them are actually very proactive and really embracing it.
Interesting. Thanks. I guess, Andrew, I don't know if I can say, as a former regulator yourself, having worked at the FCA here in the UK, sort of how do you see the challenge regulators face, sort of dealing with that pace of innovation, this explosion of innovation, and how they keep up?
Yeah, for my sins, yes. So regulation, workable regulations, I think people agreed is key to the legitimacy and legitimizing and the continued growth of digital assets. I think the challenge is currently that there's huge potential for regulatory arbitrage across different jurisdictions, mainly only regulated under anti-money laundering regulations. And the challenge that the regulators have is huge. They're doing a lot of good thinking, but not necessarily operationalizing it very well. So they're currently overwhelmed, under-resourced, struggling to attract the right talent to continue to actually deliver those regulations. I think that's a real challenge. I read a stat yesterday that the FCA's crypto asset registration has 167 firms awaiting registration. 77 of those haven't even been picked up yet, and the average time is kind of over 250 days. And so that's kind of, if that continues and the growth of firms trying to go through that, it's going to make their jurisdiction, wherever it is, much less attractive. So I think that's one point. The second point is that actually they don't have the regulatory framework or the legislative framework to work with. So they're currently only able to have powers under money laundering regulations, and policymakers have been putting out consultations and speaking about this for quite a long time. But it is taking a long time, and so without that, the supervisors and regulators are unable to actually put in place a stable framework which will attract institutions to that jurisdiction. And I think if I was a regulator now, or policymaker in a country, I'd be thinking, what can I do to produce a workable, stable regulatory framework as quick as possible, because it will give me a huge advantage over any other jurisdictions. And so, and I don't see that happening at the moment. So I think the challenge is how do they do that and how do they do it rapidly and effectively. So.
Interesting. Yeah, the point about educational gap as well, I think, is a big challenge.
But it's no different than any other market, though. I mean, I spent the majority of my career in traditional exchanges. Those regulators are overworked, understaffed, and dealing with multiple challenges that they don't have the capacity for. So I think it's inevitable in any asset class that we talk about. The regulatory component is a difficult one. It's inevitable, but it's a difficult challenge. They're just not staffed up.
Hence, there's always that lag. I guess from where you sit in the US, Dimo, how do you see the sort of regulatory landscape evolving? I guess everyone's eyes are on the SEC at the moment, particularly around ETF.
It's been kind of fun most recently.
And also sort of in the provider space, custody, it's obviously an issue that's come up as well in the US.
Yeah, there's a lot of discussions around the lending aspects of things and the custody aspects of things. And I think it's just a little bit of flexing muscle. It's a little bit of control. But advocacy is important and key for all of us. I think we all need to get involved with all of our associations to make sure we have a voice into our legislative bodies, to make sure that they understand what we are, what we're doing, what we're trying to accomplish, so the regulatory pendulum doesn't swing too far, right? You want it to be kind of dead center if you can possibly get it that way. Regulation is inevitable. We're all going to have to embrace it. So let's figure out how we advocate and get our voice heard so we can at least try to guide and educate on where the regulation can be and should be.
Interesting. Ivan, I guess in your screening, sort of what was the regulatory sort of issue that came up most? Did you discuss that point with the sort of hedge funds you were looking at, or?
I mean, you clearly have a kind of a trend of BVI/Cayman, which is, I mean, you can't hide it. There are some European alternatives, like for VC. Luxembourg is a good place. Switzerland also for exchanges. Gibraltar is the new kids on the block. It's the new kid on the block right now. But I think at the end of the day, it's about stability and vision. Because having a startup, being a founder, being able to scale is your first mission. So if you need to deploy other offices every 2 years, this is not good. I'm quite impressed in a way by Switzerland, I must say, as a French person. It hurts me. But they did it good. Why? Because they have the foundations. So it's a clear alignment of interest, saying why would we kill the foundations? It's sound money for us, for everybody. And I think this is the kind of basis you can build on, because you know at the end of the day, they won't change anything. They can adjust stuff.
That's right.
But you have a common interest and a common goal, which in some jurisdiction we are still looking.
Would anyone add anything to what Ivan said there? No? We'll move on to another question. I guess, I mean, another question we had, sort of regulatory decisions that are sort of coming down the pipeline that people are watching, I suppose in the US, Dimo in particular. What are people focusing on?
You know, I think it's an ever-changing landscape, but again, I think people are focused on where they're going to land. I think that they understand that this asset class is here, and I think this asset class is not going to go away. And I think that there's a little bit of muscle being flexed to determine kind of the ground rules and the lines in the sand. And I think hopefully calmer heads will prevail, because it is a huge opportunity for all countries, especially the United States, for growth, job growth, innovation, continuous innovation and improvement. So it would be ill of them, and also a revenue stream, it would be massively ill of them to over-regulate this and try to squash something, even though everybody wants their piece of control.
I think that's
Right.
interesting. On the revenue stream, the sort of the US infrastructure bill
Yeah.
that's just been signed into law sort of has the tax on cryptocurrency, but that
Yep.
foresees however many billions,
Yeah.
so they want continued growth in the market.
They do.
Interesting. I suppose the other point that was in the news recently is sort of US FDIC studying sort of deposits for stablecoins. Do you think that that's in the realm of possibilities, or?
I don't know. I'm not really following that one too
Okay.
much.
Okay. Does anyone have a view on the stablecoins issue, maybe more broadly?
I'd probably say, yes, it's in the realms of possibility. It would be interesting to watch where DM and Circle get in that. So maybe you might see some developments in the next year, but that's quite a short space of time in regulation, so probably not.
I guess sort of coming back to the digital asset space as a whole, how you see it evolving. So I guess what are some of the themes that you guys are most excited about? Ivan, it would be great to hear sort of from a venture capitalist perspective as well, sort of what are the themes that you're looking at or that you're excited about coming forward?
I mean, we are super bullish. We just see two roadblocks. The first one is regulation, and the other one is talent. But we're super positive about this. I think it's the right time to go to universities, to say to students, hey guys, you have a one life opportunity. Don't do like me, don't go to banking or consulting, even worse. Go to crypto. Like, go to crypto, there's money to make, there's interesting positions to take, and there is something to participate in. And this is a unique opportunity. I've done 12 companies in my short career, and I've never seen such a tremendous space.
I think one of the things which is exciting in the institutional space is a lot of people we've been speaking to are just thinking about dipping their toe in the water and haven't yet seen the full potential. And so as they get more engaged in the space, I think there will be a realization and an acceleration of the growth of adoption across the industry, because as they become more educated and as we hopefully help convey that message, there will be increased innovation, increased growth, and increased shift towards it. So I think that's what's really exciting, and we'll see in the next kind of 12 months.
Yeah, and I may add also, it's very specific because you have talents from everywhere. You have lawyers, people from finance, and people from tech. And it's not only about the tech. Many times you meet some people, you think he's a tech. No, he's a lawyer, former regulator. So that's great, and that's pretty unique.
I think the alpha offered in digital assets is truly unique. I mean, when you look at the amount of research around the world that focuses on the stock market, which is mined by thousands of supercomputers and analysts and research covering, trying to squeeze out that last bit of alpha from stock picking, if there's any left, given how efficient the market is, or given how efficient the bond market is. All this time and effort is spent on trying to grab returns from that space. Whereas you look at the alpha that exists in digital assets, it's truly astonishing. And in my opinion, it's just too good to miss out on for regular investors, but still they're slow to embrace it. I think there's many years left of alpha ahead while people are figuring out what to do, because the amount of the world's money that is still managed with traditional models, 70% equities, 30% bonds, these types of philosophical constructs that people learned at university, portfolio diversification, there's no real models out there for how much Bitcoin should you have in that kind of portfolio. How many well-known advisors are starting to talk about percentages? I mean, finally, we see some of the famous hedge fund managers starting to stand up, of course, saying, I think you should have this much in your portfolio, that much. But before that really becomes mainstream through the pension systems, through private banks who give clients recommendations about asset balancing compositions, that's going to generate a wave of demand for digital assets that I think is still a couple of years off, and there's a lot of alpha to be left in the market in the meantime.
Would you agree that there's still a lot of inefficiencies in the market too, which is driving a lot of the alpha?
That's where the alpha comes from, isn't
Exactly.
it? You look at how efficient the other markets became
Yeah.
over time, and the alpha gets squeezed out. I think there's a lot of inefficiencies in crypto, which is A, great for making alpha, and B, great for infrastructure providers and others trying to connect systems better together, be quicker across exchanges, and find those opportunities. So
Exactly.
Absolutely.
Exactly.
It's interesting, the similarities we see with sort of the early days of the hedge fund industry, people moving across from the more sort of traditional finance, seeing opportunities for alpha, and definite similarities now with the sort of crypto funds that are cropping up, maybe dressing even more casually, but otherwise definitely similar.
But just the spectrum that we deal with, we have kind of the traditional, have it be crypto cohorts or traditional players in the cohorts or the traditional finance people contemplating these things, and then you have clear on the other right-hand side, all this DeFi, CeFi, NFT stuff that is just massively going on, and that bid-ask spread in between those two gaps is massive, and you got to bridge that gap between those two. What's going on?
Perfect. Well, I sort of wanted to come as sort of time draws to a close. I suppose for an investor sitting on the sidelines, still thinking about making his or her allocation, sort of what are one or two resources or things that you would recommend to them?
Go to Blockworks website to begin.
Nice.
Well, I would say invest in a fund. I mean, look, we run a Bletchley Park fund of hedge funds, which is performing extremely well. But I think it's a similar question. If this was a conference for a range of people who hadn't yet invested in the stock market, some of them might go and buy stocks themselves, and most of them would probably put their money with a trusted manager. And I think that analogy probably holds true for pension funds who aren't familiar with crypto, for financial advisors who aren't familiar with crypto. Okay, you can try to become an expert, you can test your skill or test your luck, but increasingly there's a range of funds out there that have a tried and tested track record. There's people like us that due diligence those funds to make sure they're offering good quality and protected systems and check the way they're storing their assets. And I think that's a way for advisors to help clients get involved in the industry, going down the fund route and putting a trusted name in charge of that.
Yeah, totally agree. This is our strategy. We prefer to invest into crypto VC funds to really understand this world. And then maybe we can help our internal team to step up. But you cannot improvise yourself a crypto guy overnight. There's a lot of work to do. Yeah. A lot of kind of aha moment, like going from going from Bitcoin to Ethereum takes some time, but everybody got this moment. And going from Ethereum to Avax or Solana is another big moment. But this is something you can do overnight, and you can ask a trainee to explain you this before your investment committee.
Yeah, I think I completely agree. It's ask yourself, who do I trust, and how can I get that knowledge, and what's the best route for me? Whether that's working with trusted partners, educating yourself and your team, but also look into hiring and building that knowledge sooner rather than later, so that you can you're ahead of your competition. I think there's still the opportunity there to do that, but it's A, becoming more expensive and to find that talent, and B, people will catch up with you soon. So think about it now.
Well, you can't earn if you don't participate.
Yeah.
Right? And you don't want to participate more than you could theoretically afford to lose. So be smart, do your research, take baby steps. As you talk to the panel here, the experts, talk to your trusted professionals and try to figure out a strategy and a path, and do your research and take some steps forward.
Yeah, I think that's it. Do the homework.
Got to do the homework.
Yeah, perfect. Well, I guess, are there any, before we draw to a close and let everyone get off to have a bite to eat, are there any other points that we haven't reflected on that you think is worth mentioning?
Well, it's good to see people again, right? It's been 2 years since I've been here at the DAS London conference in person. It's been 2 years since I've been in London, and it's wonderful to not be afraid to shake hands and hug people and kiss people and say hi and talk to them and see people in person. There's nothing better than human interaction, even though everybody's talking about the metaverse now, which drives me absolutely nuts. I like the real world, quite frankly, and I love seeing all these people and participating with them and talking with them.
Brilliant. That's great. Thanks, Timo. I think that's a great place to end, and we'll let everyone get back into the lunchroom and network and get that buzz going again. So thank you very much to all the panelists. Thank you for listening.